The views and opinions expressed in this program do not necessarily represent those of Natural Bridges Media or KSQD's staff, volunteers, or underwriters.
Hello and welcome to Talk of the Bay. I'm your host, Len B.A. And my guest today is Julie Reynolds. Julie Reynolds is a freelance investigative reporter whose work has been published by The Nation, American Prospect, Newsweek, NPR, the News Guild, and other outlets. She's a co-founder of the bilingual nonprofit news site Voices of Monterey Bay. Recently, her work has centered on investigating Alden Global Capital, the hedge fund that owns the Santa Cruz Sentinel, the Monterey Herald, the Mercury News, and hundreds of other local newspapers around the country. Julie Reynolds, welcome to Talk of the Bay.
Well, thank you for having me.
I was very interested to learn about Voices of Monterey Bay because I didn't even realize you existed until about a week and a half ago. So,
all right. Well, glad you found us.
Yeah, and now maybe more people will know where to find you.
That would be awesome.
You've been following Alden Global Capital for quite a while. It's generally described as a hedge fund, but it owns newspapers, mobile home parks, and other holdings. Could you describe what kind of business entity it is?
Yeah, and they're not even a hedge fund anymore. That was kind of their origin. They have evolved more into what's called the private equity sector, which is it's a way of saying unregulated banking or very lightly regulated banking. It's a system where it's a group of private investors. They're not soliciting outside investment at this point. But they are kind of in the genre of hedge fund private equity, where they use private money to invest, in this case, in distressed businesses. They're a sector called vulture capitalism or a vulture hedge fund. And the vulture part is they look for businesses that are in trouble. And normally you'd think they would want to inject some money, bring them back to life and make a profit. But instead of that, they kind of suck out all the resources they can and just leave the bones to die in the desert, to lie and dry in the desert. And they've done that for numerous businesses. But the one that I've been investigating for almost 7 years now is how they have ravaged local news chains by doing exactly that same thing. Take struggling chains and suck the life out of them and then not really worry about the impact on democracy.
Yeah, and for media, I mean, the local newspapers historically have been really the only source of news about what's going on in local government or, local land use or local environmental issues. And without real local journalism, that's become, it's kind of disappearing. Like that information isn't there unless there's particular individuals or organizations that are chasing after it. And have you seen that pattern running in these acquisitions of Alden Global?
Absolutely. I mean, the coverage has just shrunk tremendously. I was a reporter at the Monterey County Herald for 10 years, and I felt I couldn't do my job anymore after Alden took over. They just reduced staff so much. You're covering so many beats. There are things every day that don't get covered, and that's not the fault of the intrepid reporter.
So
reporters were still there, but you just can't do the job before.
We're having a little trouble with your connection. So we're having a little trouble with your connection. So you froze up there. But
okay, I didn't feel it.
Yeah, well, it's funny. We don't feel it. We only see it as the data comes through the ethers here.
Right.
But yeah, you were saying you had worked at the Monterey Herald, and you've seen this starting to develop, and then we kind of lost you there.
Yeah, and I mean, we've all seen our local paper shrink and shrink and shrink. That's not, you don't have to work at a paper to know that's happening. We can see that local events just aren't getting covered like they used to.
Right.
So, am I coming through all right?
Yes, you are currently coming
Yay.
through great, and hopefully forever the rest of the show. And thank you for connecting remotely. I know it's not the same as being able to be in person, but I'm glad you had the time to connect as you have. Um, when you began, when you started doing this research, how did you first get curious enough about who they were and start to investigate the owners of the paper themselves?
Well, I experienced their impact personally when I worked at the Monterey Herald. It felt like I couldn't do my job anymore. We just didn't have the resources, the time to do investigative reporting, which is what I do. So after I left the Herald, I decided, hey, now I can look into these guys. I ended up taking a job with the union that represents journalists, and I was just going to, I was freelancing. I just was going to put out their little newsletter or something, and then we put our heads together and said, "Wait, I'm an investigative reporter. Why don't I start investigating these guys instead?" So I initially did it for the News Guild, but then I started, freelancing, writing stories for other publications about this, and I'm still almost 7 years later, still investigating Alden.
Yeah. And as a private equity firm, Alden Global Capital is not alone in their practices. We have a local hospital, the Watsonville Community Hospital, which was once a nonprofit, locally owned or locally run hospital, I guess you would say, and it was sold to a private company that sold it again to another private company that sold it again to another private company. And these private equity firms that have been buying up hospitals, not just in the Monterey Bay area, but all over the country, have been doing some very interesting strategies of, for example, separating out the physical asset of the hospital itself from the business operation of the hospital, and then in some cases creating separate companies for operations and another company for the real estate, and then charging the operations company for using the real estate, even though in fact both companies are effectively owned by the same investors, and and using them to essentially load them up with debt. And then then they can claim bankruptcy because they're in debt that they can't pay,
Mm-hmm.
and they're
Got it.
they're taking advantage. And we've seen this, exactly as what's happened here, where they were threatening to close Watsonville Community Hospital because of bankruptcy. But the bankruptcy is because they've loaded it up with debt that it didn't
Yes.
have before they owned it. So,
Yep.
it's a pretty crazy strategy. And they're also good at working the system, where there was some research done by Public Citizen about hospitals, a lot of these private equity owned hospitals getting billions of dollars in aid during the COVID pandemic that was intended to help keep health care resources available. But these companies that actually had been quite profitable and had billions of assets were getting billions in bailout money from the federal government by taking advantage of those COVID programs. So it seems like the ultimate scam. Um,
It is pervading every sector of our society. There's no doubt about it. We are going to look back on this era in history and just shake our heads with shame, I believe. It's healthcare. And you're absolutely right. The loading up with debt is a classic move. And also extracting resources, selling that real estate, doing that self dealing where their own company has to lease a building from them.
mhm.
Is exactly what they've done with the newspaper chains that I've followed, but they do it. Other companies and even Alden are doing it in other sectors as well. Retail stores. I mean, you name it, any part of our society. But when they get into essential services, that's when I get really concerned. And I'm talking about your right to information, your right to healthcare, and now your right to have a roof over your head. That's when it gets really scary.
Yeah, and could you talk about that, about the right to have a roof over your head?
Yeah, absolutely. I was doing a story just about a couple months ago about Alden and a news chain, and I noticed there was a that they had acquired a mobile home park in North Carolina. And so I put it in the story I mentioned, and it ran several places. Voices of Monterey Bay was one of them. And people started contacting me after that story from all over the country. People who lived in these mobile home parks that had been taken over by Alden. And reporters, the few reporters still in small town America, also some of them were calling me going, "Hey, I've been covering this for a while. I didn't know it was beyond our town." I started investigating, digging up records. It's very hard to look a lot of these records. They're very hard to find. But I have found more than 120 mobile home parks now that they have bought. They just admitted today in court that they are in 20 states. And all of them, the same stories are being told. They're not doing any repairs. They're not doing any maintenance. They're not even filing the proper permits with the states that they're moving into. And they immediately sent out eviction notices, even to people who'd already paid their rent and had proof of it. I don't know if they're disorganized to the nth degree or if this is deliberate, but it certainly is absolute chaos. And people are panicking. There are people who have fled in the middle of the night because they got a so-called eviction notice that it turns out wasn't even legal, but they were so afraid.
Right.
And there are people on the verge of homelessness, and there's winter coming in many of these states right now, and that's what's going on at these parks.
Yeah, and mobile home parks, really all over the country, tend to be, for the most part, a refuge for people who can't afford standard constructed homes.
Yeah,
So we're
like one
talking
of the
about people who are low income to begin with.
very, very vulnerable citizens. One of the first people who got a hold of me was a school aide, an elementary school aide in Appalachia in Virginia, named Sarah Roop, who told me that her school was probably going to lose about a quarter of its students because this mobile home park was the only low income housing in their area. There just is nowhere else. So people are going to have to leave the area, which meant the school population was just going to be dramatically diminished. And
Wow.
that's the kind of scenario I'm seeing all over the country. What's interesting is it's not just the tenants who are upset. There are even people, in North Dakota, there's an alliance of manufactured housing association, it's called. And this usually represents mobile home park owners. Well, their director of legislation is so upset about this that he's actually written a law to um, try to rein in these practices because they're all out of state. They're all from private equity firms. They hide ownership behind piles of these incorporation form called LLCs, and they're ultimately incorporated in Delaware, so you never find the name of a human being behind it. But even when organizations like that normally take the sides of the owner are upset about it, and they're actually said that Alden is breaking the law in North Dakota, it's getting pretty serious. There's 14 lawsuits right now in Virginia and West Virginia that are being litigated about exactly this against the Alden companies that are doing this.
Wow. And I assume they're actually making money by doing this. Like they're increasing their profits in some way by.
Yeah, it seems really counterintuitive. Like when I first started looking at their practices, they're paying more than market rate to buy a lot of the parks. They're evicting tenants. They're raising rent 40 to 60%, but they're also evicting tenants who sometimes only owe $20 or don't owe anything at all. And I'm like, why would you want to evict people if you're making money? But there are a lot of reasons. The new people who come in might pay higher rent. They could also move their own trailers onto the empty lots and rent those out at much higher rates. In some cases, I noticed the property was zoned for high density housing. So it's possible they might want to sell to a developer who would just build apartments or condos or something.
Hmm.
But the end result is these very, very vulnerable people, many of them who I've talked to are on disability. They're veterans. They're living on, 500 a month in Social Security. So a $200 a month rent increase is just absolutely devastating to them. At one park, that I've been reporting on in Virginia, Alden actually, the water went off. And it turned out Alden hadn't paid the bill. They owed $15,000 to the utility company.
Wow.
Yeah.
That's one way to up your profits. Just don't pay any of your operating costs.
Yeah, and they're actually being sued for it now under the assumption that they did this intentionally because they had multiple warnings from the utility company that the bill was due. And so that they knew this was happening, and it could be a way to get people to leave. It's some of the things landlords do when you want tenants. You try to turn off the utilities. Well, that's
Right.
not legal. So, but they're whatever their intention, they did not pay the water bill.
Yeah, and lots of times, the laws around eviction require waiting periods and other things like that, and this is a way for them to get around that by just making it intolerable to stay.
That's exactly it. And it's sort of similar to what they've done in newsrooms where you just can't stand to be there anymore. And so everybody walks away, and then they think their problems are done. They
Yeah.
have the company left in their hands to do what they want with it.
Well, if you're just tuning in, my guest is Julie Reynolds with Voices of Monterey Bay. She's an investigative journalist, and she has been tracking the actions of Alden Global Capital. It's a private equity firm that owns, as it happens, most of the local papers right here in the Monterey Bay area, as well as hundreds of other papers around the country. And they've also been investing in, among other things, mobile home parks. You mentioned it's difficult to track everything they're doing because they kind of mask their ownership of things. Could you expand on that a little?
Yeah, and this is a classic move for a lot of private equity firms, and Alden especially. A lot of their actual funds are incorporated in the Cayman Islands, which is known as a tax secrecy haven. But they've moved most of their incorporations now into the state of Delaware, which, according to groups that monitor this kind of thing worldwide, is actually considered the top tax secrecy haven now in the world, even surpassing places like the Cayman Islands that are notorious for that. So they will have, let's say you buy a mobile home park. In the case of Massey's, they set up this LLC called Massey's MHP LLC. That's owned by another LLC that's owned by another LLC, and you can go up this big chain, this big food chain, and it ends up with this entity called Homes of America LLC. I was able to show that is directly part of Alden and Smith Management, which are the two main companies behind the Alden Global Capital enterprises. And I found something very curious. I found a document for another LLC that is the financing wing of it. And the only way I could find this information is the state of Florida requires foreign corporations, meaning out-of-state corporations, to actually give a lot more information than Delaware asks you to do. So Florida had this information. And so you sort of have to do this workaround. Well, this LLC that finances it happens to be named Tribune 2 MHP Finance 1 LLC. And it made me think that since Alden recently acquired the Tribune newspaper chain, I'm curious as to whether they are actually extracting the money from that chain to buy these mobile home parks. I've estimated they've spent between 150 to at least 150 to probably well over $200 million in acquiring these parks over the last year.
Wow. Yeah, so they've jumped in with both feet, and not necessarily to the benefit of anybody's need for a residents.
It's a massive undertaking, and it might even indicate that they are losing interest in newspapers and have now are ready to move on. I don't know, but there are signs that might be possible.
Wow.
They had extracted, I had been able to prove several $100 million out of the MNG newspaper chain, which is the one that owns our local papers here, the Santa Cruz, Monterey, San Jose papers. That was money that could have gone to reporters. It could have gone to, all kinds of things, even just office supplies, things that all the reporters are doing without. But instead, it went to outside investments for Alden.
I'd like to play a little sound clip. I had a guest on this show a while back named Alex Ferrer, who's a researcher in Los Angeles and was one of the co-authors of a report called the Vacancy Report, where they were looking at all the vacant housing in Los Angeles, which happened to outnumber the number of homeless people considerably. And they were looking at what's behind this and what are the phenomena behind that. And so I want to play this short clip. It's just a couple minutes of Alex Ferrer here talking about some of their findings.
I'm gonna share some stats that we've put together both for the vacancy report as well as a forthcoming piece on this issue in particular. And so we can say that in the city of LA, 67% of rental units are owned by some form of investment vehicle. 23% are owned by a trust of some kind, and 43% are owned by what we would consider a corporate entity. That's a limited liability company, a limited partnership, an S corp, whatever. And these entities also own, as you mentioned, a fairly considerable share of the currently developable vacant land in the county, in the city rather, of the privately owned vacant land that is not owned by the city. 76.6% of these lots, or the lot area, is owned by some form of investment vehicle.
Wow.
So certainly that's a large issue in that really needs to be taken account here. There's a lot of community-based organizations have very hard-won local knowledge in the fact that these corporate landlords are serial evictors, that they're quick to use the eviction option, and that they evict frequently, and that they employ all sorts of means to make evictions happen, like the Ellis Act, which is a statewide provision in California that allows landlords to exit the rental market if they wish, and it's used to leave the business of being a landlord. In theory, often it's used for a condo conversion or something, and it leads to the displacement of whole buildings worth of people. There's actually a kind of a growing literature on this issue as well, on serial filing. There's a scholar at Georgetown named Eva Rosen who's done some great work on this, and Laura Raymond and co-authors in Georgia who've been studying this in the Atlanta area for a long time. And there's a lot to be said for the fact that the corporate entity and the size of the landlord are both associated with more frequent eviction.
That was Alex Ferrer. So this is obviously a pattern that's bigger than just Alden Capital, but Alden Global Capital. But you're getting into the nuts and bolts of this one particular organization, and I'm wondering, are you seeing things that, in some cases, you indicated some of what they're doing with mobile home parks is actually illegal, but are there things they're doing that once might have been illegal but now are not?
I think quite a bit of what they do once might have been illegal. Alden has always skirted the edge of the law. That's their MO. And even when for instance, they took a few, I think it was 250 million of employee pension funds from the San Jose Mercury News and another newspaper, and invested it in their own funds, rather than, you're supposed to invest it in the most lucrative place for your members. You have an obligation when you're investing pension funds. They did not do that. They did self-dealing again. The Department of Labor found that was fraudulent activity, and they settled very quietly for it. But so they have this way of never quite getting caught, but they did pay some hefty, they didn't call them fines, but they had to repay a bunch of money to make up for the money that those funds lost. They weren't even competitive interest rates. So the funds actually were worth less than they would have been in the free market.
Wow.
Yeah. So, a lot of this stuff, I think it all boils down to a lack of transparency. I call these firms shadow banks because they will invest in buying businesses, but there's such a lack of regulation that normal banks have when you get a business loan to buy to buy a business from a bank. You're going to have to go through a lot of disclosure. And there is such a lack of disclosure in these activities. And I really feel like at this moment in history, it's a big free for all. And the real estate market abounds with these LLCs with hidden owners, and the tenants in these parks didn't even know where to send the rent to. They didn't even know who to call. There was nobody to call. There was no name given. They were given an app to use on their phone that didn't say if their money was even for their unit. They didn't know where it was going and if it would be recorded in their name. I mean, one of the fiascos that happened in Virginia was they started evicting people who were subsidized by HUD. Well, Alden had forgotten to register their address and bank account with HUD, so the money went to the former owner for months and months. Alden is evicting these poor people whose rent was actually paid. And even after they got it straightened out, it took some legal aid attorneys to do that. Alden was still evicting people, even though they knew they had paid the rent, because they couldn't figure out who had paid what. So they just put up these notices anyway. And Southwest Virginia Legal Aid also found that the eviction notices themselves weren't legal. They were copied from language that was years old and wasn't even up to date. In one case, there was language from another state. They were just copying and pasting on these notices. So it's just a free-for-all, you know. It's shocking.
Wow. That's crazy. Well, yeah. I want to explore this more. We have much more to dive into, and you're mentioning of the payment with an app on the phone brings up another subject. But first, we're going to take a really quick break. So all of you listening out there, don't go away. We've got a lot more coming back with Julie Reynolds right after this. Welcome back to Talk of the Bay. If you're just joining us, my guest is Julie Reynolds. She is an investigative reporter whose work has been published in The Nation, American Prospect, Newsweek, NPR, the News Guild, and other outlets. And she's co-founder of the bilingual nonprofit news site Voices of Monterey Bay. We've been talking about her research investigating Alden Global Capital, which is a private equity firm that owns hundreds of newspapers around the country and also has been investing heavily in mobile home parks over the past year or so. You mentioned, Julie, that in some of the mobile home parks, they were making tenants use an app to pay rent, which brought to mind a recent article in ProPublica by Heather Vogel, where there's been some investigation going on of a Texas-based software company, RealPage, that creates a software called YieldStar that helps landlords set prices for rentals. And critics are concerned that the company's proprietary algorithm is hurting competition. So I'm reading from her article here, and I just want to read a short excerpt from that article. On a summer day last year, a group of real estate tech executives gathered at a conference hall in Nashville to boast about one of their company's signature products, software that uses a mysterious algorithm to help landlords push the highest possible rents on tenants. Never before have we seen these numbers, said Jay Parsons, a vice president of RealPage, as convention goers wandered by. Apartment rents had recently shot up by as much as 14.5%, he said in a video touting the company's services. Turning to his colleague, Parsons asked, what role had the software played? I think it's driving it, quite honestly, answered Andrew Bowen, another RealPage executive. As a property manager, very few of us would be willing to actually raise rents double digits within a single month by doing it manually. The celebratory remarks were more than swagger. For years, RealPage has sold software that uses data analytics to suggest daily prices for open rental units. Property managers across the United States have gushed about how the company's algorithm boosts profits. The beauty of YieldStar is that it pushes you to go places that you wouldn't have gone if you weren't using it, said Courtney Ballas, Director of Revenue Management at JVM Realty, referring to RealPage's software in a testimonial video on the company's website. RealPage became the nation's dominant provider of such rent-setting software after federal regulators approved a controversial merger in 2017, a ProPublica investigation found, greatly expanding the company's influence over apartment prices. The move helped the Texas-based company push the client base for its array of real estate tech services past 31,700 customers. The impact is stark in some markets. In one neighborhood in Seattle, ProPublica found 70% of apartments were overseen by just 10 property managers, every single one of which used pricing software sold by RealPage. To arrive at a recommended rent, the software deploys an algorithm to analyze a trove of data RealPage gathers from clients, including private information on what nearby competitors charge. For tenants, the system upends the practice of negotiating with apartment building staff. RealPage discourages bargaining with renters and has even recommended that landlords in some cases accept a lower occupancy rate in order to raise rents and make more money. One of the algorithm's developers told ProPublica that leasing agents had, quote, too much empathy compared to computer-generated pricing. And that's from ProPublica.
That makes a lot of sense. It definitely fits the pattern here. When I was looking at these parks, I was trying to figure out why were they willing to pay more than market rate to buy them. It didn't make sense. But there is a wonderful report that came out in 2019 that I found. It's called Private Equity Giants Converge on Manufactured Homes. And it's put out by the Private Equity Stakeholder Project and some others. And that kind of broke it down to me what the incentive is there. Paying too much for the parks actually drives up the value of the parks, for one thing. It's created this kind of buying frenzy among private equity. So they're all kind of outbidding each other. And the advantage is they have what's absolutely a captive market. People, especially if people own their homes on these parks, some just rent the trailers that are already there, but some own them or are paying for them. Well, if you raise their rents $200-$300 a month and they can't afford that, they also can't afford to move their trailer. It can cost up, $15,000 to $50,000 to move a trailer, and especially if they're old and in bad shape, it's very difficult to do. And so, companies like Alden are coming in, and it is literally in their contracts that if you can't move your trailer, you can't pay the rent, you can't sell your trailer on the free market. You have to sell it to Alden at the price they name. So it is absolutely a captive market. They win whether you stay, they win whether you go. I talked to one woman, and her neighbor had to sell her trailer to the Alden company for around $3,000, even though it would have been worth about $12,000 on the free market.
Right. Yeah. And I've seen similar situations, in mobile home parks in other parts of the country that, in California and Arizona, that it's quite typical that people can't afford to move them. And as you said, oftentimes they've been up on blocks for 12 years. They don't own tires for them anymore. It's a big deal. It's a very expensive deal for them to get that trailer or mobile home in condition to be moved again. And if you don't have money to handle a rent increase of $200, where are you going to get the money to move it?
We're seeing so many factors all converging on the kinds of rents we see in the Monterey Bay area, where people can't afford to stay here anymore. And, this is going to have long-term implications for our entire society, this deliberate aspect of the housing crisis, where people are creating apps like that. They're creating this kind of business model like this to just raise up rents because they can.
Yeah, and then interestingly, they're saying further in this same ProPublica article, they were saying, well, yeah, with some companies were making more with a 3 to 4% vacancy rate, but higher rents than if they had a 1.5% vacancy rate with lower rents. So they were saying, oh, this is a good thing.
Yeah,
But when
yeah.
you push up the vacancy rate in a housing market that has incredible in demand, there's such a shortage. You're basically just forcing people out onto the street. And this is, a phenomenon. Obviously, we all see this. If you live in the Monterey Bay area, you've seen that there's an increase in people who are living on the street, and virtually, not all of them, of course, but the vast majority of those people did have homes, and
Right.
don't anymore. So,
Yeah, and I young people in my family, are just struggling spending every penny they earn to pay rent. I didn't have to do that when I was young. It's changed people's lives and turned them upside down. And the vacancy rates in these parks are pretty big now. I mean, after they took over the Massey's Park in Virginia, I'm told, have a 20% vacancy rate now with all the people who got afraid and left. That doesn't seem to bother them because they are making it up in other ways, as you say.
yeah, and they are also, they're able to sit on, if the park is appreciating in value, they can just sit on it and let it appreciate.
And
which
they
is
are artificially elevating the value of the park by these practices. A
right.
40 to 60% rent increase overnight, is even if only 20% of the park leaves, that's a huge jump in cash flow. And then they're using that money to buy more parks, and these prices will keep going up both for the parks and for the rents of the people who live there.
And as the valuation of the park goes up, they can borrow against it to get money to buy more
It
parks.
raises
So
their
it's
borrowing power. And there
part
are
of the
federal
game.
loans too, like Fannie Mae, that are subsidized by we the taxpayer, where they can get really good rates. So they can also use that to buy these parks as well. I haven't found if that's the case with Alden or not, but there are other companies doing that.
Wow. So as you've gone into the details of how this one particular company is, basically exploiting every possible angle of how finance works and how regulation of housing works or doesn't work. Do you have a takeaway of what needs to change and how it can be addressed?
Definitely, there has to be more happening on the federal level in terms of regulation, and Congress has been dragging its heels on any kind of regulation. I haven't done the research on the number of electeds who actually, get contributions from private equity firms, but I imagine they're a pretty powerful force in Washington. Elizabeth Warren tried to introduce the Stop Wall Street Looting Act, which would take away or I would say it would add some levels of transparency to these organizations. And it was not even very radical, in my opinion, but even that has stalled. It's just no one is legislating their way out of this. And until we have laws that regulate this, it's absurd that we have very strict laws in terms of banking. And even after the mortgage crisis, we have tightened up our regulation of the mortgage industry, but we have not tightened up any regulation of private equity or hedge funds. That is not something that you can fight at the state level. I would say the only thing that I see there are heroic moves going on around the country where they're filing class action suits. Pro bono lawyers are coming in and helping these people. But like I said, these are our most vulnerable citizens. They don't have weight in Washington. They don't have power. But, there are some Davids trying to fight the Goliaths.
Yeah,
and,
well, it's trying to...
I do report on them because I really want to, I want people to see that someone is doing something, at least giving it their best shot,
Right. But it does tend to be when it becomes of this magnitude, sort of like trying to use buckshot on an elephant. You're, you might slow things down and maybe make at least make them follow what laws do exist in one location or another. But it seems like the whole system is been corrupted in a major way, and it's at a time when we're still hearing a lot of political rhetoric about how we need to deregulate and deregulate and deregulate. Well, we've deregulated a hell of a lot in the last 30 years and 40 years, really, and it doesn't seem to be improving the quality of life. And I'm kind of pondering, the logic behind it. How come that argument still seems to carry? But it still seems to carry with some people.
Yeah, and well, even today in court, there was a hearing for a potential class action lawsuit in West Virginia at one of these mobile home parks, and I am told that the plaintiffs brought up the fact that Alden is, an example of vulture capitalism. They even proudly claimed that title. Um, the founder of Alden was one of the pioneers of what's called vulture capitalism, and the judge apparently said over and over again, "I believe in capitalism. I believe in capitalism." And didn't grant a number of the requests. I'm still waiting for updates on the status of that lawsuit. But, it's an example. It's so inculcated in our national fabric, to let the free market do its magic. But I think, we see now that magic it's kind of a sleight of hand.
Yeah, does the name Voldemort ring a bell? I mean, what kind of magic are we talking about here?
The Wizard of Oz behind the curtain,
Well, and the fact is the magic is made possible by the way we write the laws, and a lot of laws have been removed, and others have been rewritten over the last 40 years to make this sort of thing easier and facilitate, the sort of sleight of hand that you've described of multiple ownerships and serial ownerships of enterprises that essentially make it very difficult to understand what's actually going on, and allow a lot of serving of the exchange of money, which just means more money is getting into certain people's hands, but it doesn't sound like there's any value added. Is there anything that in its ownership of newspapers and its ownership of mobile home parks has Alden Global Capital added any value to any of its assets?
No. No.
It's a short answer.
I'm thinking about, the real estate, that was valuable. Did it add value to the businesses, to the communities? Absolutely not. It's called a vulture for a reason. There's zero investment back into these businesses. That is one of the hallmarks of this type of investing. And, when I grew up, we had those stories where, somebody came in and took over a struggling company and brought it back to be a giant again, and turned it around and got rich doing it.
Right.
Well, the origin
and
of all
that's
this,
one kind of capitalism.
When hedge funds started, and that's what started us partly on this path of deregulation and opacity, is that they were considered small groups of sophisticated investors who didn't need the regulation. They weren't like the regular people buying stocks who did need all this information about what are you doing. You realize you could lose your life savings, all these kinds of caveats that were built into, the normal stock exchange. These sophisticated investors got laws passed to say we don't have to follow those rules because we know what we're doing. We don't need those silly rules. We are beyond that. Well, that opened up the floodgates to a group of people who are sophisticated investors controlling all these kinds of markets and writing their own rules pretty much as they go. It's just been this explosion over the last 20, 30 years.
And it seems to be snowballing in the sense that as a private equity firm, you're private. You don't have publicly available stock. It's owned by a relatively small handful. And those people get quite rich, which enables them to own more stuff. It's sort of like, okay, private equity could buy this little thing here and that little thing there, but they make so much money at it that then they can go buy these big things over here and hundreds more over there. And pretty soon, private equity entities are owning, vast proportion of the economy. And that seems like a potential problem. Or a real, not just potential, but an actual current problem.
Yeah, and they have it's fortunate for them because they have a two-edged sword. There are fewer reporters covering this because, they're also draining the newspapers dry, or the news organizations. I prefer to say that because it doesn't matter if it's on paper or if it's online. You still need these paid professional journalists who aren't there to look at what they're doing in many of these small communities. There's no watchdogs anymore. And then the other thing is that they are able to hide behind the fact that they are tightly held. It's a small group of people investing. I don't even know Alden's net worth anymore. I once knew it because they did file some documents with the SEC. Well, they don't file those anymore. So we really have no clue if they're a big private equity firm or a tiny, tiny little private equity firm.
Wow. And that's the opacity that you refer to. Like we just don't know.
Yeah. When they were a hedge fund, we did have documents because they did have to report things because they were taking in money from a lot of public pension funds. CalPERS was one of them that invested heavily with Alden in the early years. A lot of private company pension funds invested. And so we were seeing even the Knight Foundation, which defends journalism, had invested with them. So once they got that money and raised it, they got out of the hedge fund business and just started private equity. So the way they can operate is they use other people's money to build up this portfolio of businesses. Then they load those businesses with debt, and they can just keep working on debt and debt and debt and more debt, and they don't need the investors anymore. And that's exactly how it's accelerated to this point.
Wow. Well, I had a guest on a while ago, Taylor Lincoln, who's a researcher with Public Citizen, the organization Public Citizen, and he had, we were talking about the use of COVID bailout funds for healthcare facilities owned by private equity. And I just want to play this. It's just a couple minutes of his commentary about how that has been playing out and how the rules don't really make much sense. This is Taylor Lincoln of Public Citizen.
I would like to make about the private equity, and it kind of gets back to me this: what have you done for me lately? And just kind of the idea of how it's a little bit offensive that the public essentially bailed them out. The crisis they had nothing to do with causing, but bailed them out, and that is just how offensive the private equity business model is. And so I think one of the things I didn't fully explain when I talked about these big buyers buying companies, chains of hospitals, dermatology offices, fast food chains, whatever it is that it's not with their own money that they buy these businesses. They buy the businesses with borrowed money. And they take that borrowed money, and upon acquiring the business, they transfer to the book of the business. And so that the, say, hospital chain or hospital now has a bill to pay back a loan that it didn't ask for, so that a rich person or collection of investors essentially could come to own it. And then, like, for instance, another thing they often do is then take the land. So say the hospital, restaurant, whatever, but oftentimes a medical facility owns the land. They sell the land, and then the hospital becomes a renter.
Oh, yeah.
Well, you can guess where all this money goes. This money, the sale is like a dividend. It goes to the investor. And further into the heads, they win, tails we lose aspect of it is that these businesses, especially retail businesses, something like 2/3 of businesses to go bankrupt in the last 3 years prior to the pandemic were owned by private equity. You think, well, that's awful for private equity. They lost their investment. Well, if they've squeezed enough money out of this thing before the thing goes bankrupt, what's left is the workers. Well, what's left is the business going bankrupt and the workers holding the bag and not having a job, or in the case of a community that relies on a hospital, it can be a community not having a vital hospital. A lot of times the hospital that the private equity firm acquires is a distressed hospital, a essential hospital that already isn't doing that great, and all of a sudden they've had their fun with it, and they leave it to either go bankrupt or they say, like, well, it's on the brink of bankruptcy, public, we need some money from the state or from the city, typically from the state.
Right.
There's just reading about what they've done. There's just so much behavior on the part of the private equity industry relating to CARES or not. It's just offensive that I think it is outrageous. And there is legislation pending in Congress called the Stop Wall Street Looting Act. And it would impose restrictions on the extraction of dividends. It would make the partners in private equity firms more liable as individuals for things that happen, as opposed to letting them kind of wash their hands of things in a sort of corporate shell type of way. It does a few other things that I'm forgetting about, but it would create, it would make workers be further up in line for compensation in case of financial distress. So there's a number of things that it does that would attempt to police these, essentially, like the name says, looting by Wall Street folks.
So that was Taylor Lincoln of Public Citizen. So, as you've described, Julie, this is a kind of the same dynamic that you've seen in looking through Alden Global Capital, and I really am so grateful for the work that you're doing, looking at how it's impacting our local media, particularly, and the ability to have really coverage for what's going on locally in a local newspaper, and to then see how it's extended into essentially the sort of last resort housing for many people, mobile home parks. It looks, it's, to me, it's, on one hand, it's tragic. It's also outrageous that nothing has been done. And you mentioned, this Stop Wall Street Looting Act that is stalled now in Congress, that Taylor Lincoln referred to as well. We're just a couple of people talking on a community radio station here right now, but what would you like to see happen in the near future to start to get a handle on all of this?
Well, and to be fair, I don't think Senator Warren has given up on the Stop Wall Street Looting Act, but Congress is, changing all the time. So we'll have to see where that goes. So there are people still trying to push for those kinds of reforms. I definitely would like to see more of those. What Taylor described is that's the playbook. It is absolutely, if you could read a rule book for how to do this stuff, he just read it, and that's exactly what Alden does as well. On the local level, sometimes I feel like I'm just swinging at windmills. I've been reporting on Alden for nearly 7 years. I do feel encouraged that the national dialogue about these companies has changed. There is a lot more reporting. There is a lot more awareness that this is exactly what private equity is doing. Now you see stories all the time. People talk about it. They know the name Alden Global Capital. They were unheard of before, and people didn't know why their local newspaper was being decimated or just was a shadow of its former self. Well, now you know that part of that was deliberate. So the awareness is growing, and that's where we start. But, I also feel a lot of frustration. I've reported on this for so long, and they're just seem to be getting bigger and worse. The outrage is the thing. I love journalism. It's in my blood. It's what I do. And, I loved the Monterey Herald when I worked there, and to see it, be crushed intentionally, it's one thing if there's market forces we don't understand, but some of this was deliberate. And so to see that happen is really heartbreaking, But then when the mobile home park thing came to my attention, it was just like, have you no shame? I didn't, it's one of those stories that's just out of Charles Dickens, to see what people are going through. Especially, this is in Mississippi, Louisiana, Alabama, North Dakota, West Virginia. These are people who struggle on a good day. And, it's just, I don't understand how someone can sleep at night. But it doesn't seem to bother some people.
Yeah, that's a mystery to me, too. And it's interesting that, a lot of people are clearly frustrated and angry at the government for that kind of condition, where they see their quality of life declining, the affordability of housing declining, the availability of health care in the town they live in declining, whatever it is, there's, very legitimate complaints out there. And I guess the thing that bothers me the most is how that anger is being taken advantage of and manipulated in some cases to, direct that anger towards somebody who really has nothing to do with why things are declining the way they are.
Yeah, we take it out on each other. And,
yeah.
And that's the problem when, it's easy to say we should all rise up and demand better government and demand more of it. But when we're all struggling to pay our rent or our mortgage or just even to keep the job, you don't have much energy left over at the end of the day, or you're working 2 or 3 jobs. And so it's a vicious cycle. And I don't want to stay in the doom and gloom, because what we have to do is keep awareness, keep spreading the truth and sharing information, and empower ourselves to demand better some way, somehow.
Well,
I'm not an organizer. If I
right,
knew how
you're
to
a
do
journalist.
that,
That's
right.
But as a journalist, we have about a minute left, and I want to invite you to share with listeners how they can follow this story further and keep up with the reporting that you and your colleagues are doing.
Yeah. Well, let's see. My stuff's all over the place. You can Google my name in Alden and it'll show up. I do report a fair amount on Voices of Monterey Bay about this, especially when it affects our local community. And that's voicesofmontereybay.com. I occasionally post on my Twitter account, which is Girl Reporter, GRL Reporter. But like I said, you Google my name in Alden, whatever I'm working on will come up. I am working on a bigger story about the mobile home park issue right now for a national publication, which until it's all done, I won't say, but
Okay.
stay tuned.
Stay tuned. And is Voices of Monterey Bay, I believe it's voicesofmontereybay.org, is that right?
Yeah.
Okay.
Yeah, exactly.
Great. Well, Julie Reynolds, it's been a real pleasure, and even meeting you even virtually. I hope we can meet in person someday. And thank you again for coming on Talk of the Bay and for all your work.
Well, and thank you so much for caring about these issues.